Good evening, everybody. This is John Seville from Acorn Wealth Corp. This is your executive summary for stock setups for the 20th of October. So, having a look at the overseas markets, you can see the futures are currently, let's refresh this, because this has been changing a lot. They were down about 5-6 points. They've rallied back up a little bit. The overseas markets, you can see, have opened. You can see the Hang Seng is down. The FTSE and the DAX is kind of leveling a little bit up. So, obviously, playing into the story we've been talking about over this last little while, I'll bring up my notes here. You can see that the S&P 500 has had a bullish hammer candle, but unable to close above open range. So far, bullish action, as we talked about last week, but not being able to close above the open range. So right now you can see this trend lines coming into fit form, and it's going to really be a very interesting day for the next few days, as to see how we go about interacting with that. A breakthrough of this area is going to mean probably open range will remain bullish until the end of the month. So we're obviously looking, as you can see on here on the right, I found quite a few shorts and longs that are by the rules. So that's my little watch list that I've been creating, and this is how I basically go through my research each night. So looking at tomorrow, I mean the bear argument would be that we kind of create a star formation, which is where we kind of the high of the day might tap that resistance. We get a low of the day which comes down to say 2029, 2023, something like that, and then we close in the middle of it. Then we get a down day and start to pull back to this level. What we could start to see happen is create for example, a channel. So you can see how we had that pull back to the moving average, where we thought that things may start breaking down. If we want to anticipate the market rather than react to it, we want to start thinking about what the potential would be for a downward movement to begin. So you can see that this would start to show where the momentum could start to change into oscillation, and that plays into if the market were to break open range, that would play into an oscillating channel, which would then, if you can see, if we look forward towards the end of the month, you know, we start to get into kind of hitting that 2060 level, right where the end of the month would come into place, which is where the 200-day moving average is. If we don't break through this resistance, then we're looking at a kind of a reversal and a possible kind of head and shoulders pattern here on the S&P 500, which would be looking like something a little bit like this. So we'd be looking, basically something like that. So we'd come up, come down, rally up, again into resistance, and then break. So that would kind of tie into that the consolidation argument I was talking about last week. On the bull side, if we break through, we'll just continue respecting these moving averages, and a breach of those moving averages is what would indicate that trend has ceased. So in terms of worthwhile mentions, we'll have a quick look down the notes here. You can see I've got AU here as the top one. This is the gold play. Now those options are up about, depending on when you got in, about 150, 200%. You can see we've had a breakdown here of these moving averages. So gold is starting to retreat. So I'd be looking at, if you haven't, we sent out a first profit-taking alert here when it was at 950. I think any further breakdown below this moving average would indicate that this trade may be over in the short term. But just a quick comment on that, and obviously at the very least take your original capital out, and if you want to let the rest of the profit ride, that can be one way to go big, but also protect your original investment. Cash is king. Alright, AVGO is the next one. Obviously this is the semiconductors for Apple. We can see that we've rallied up, and this is kind of what we're seeing in some of these stocks, is that they've had this short squeeze where they've rallied up and then they're reversing. So we're starting to see some oscillation coming back into the market. We've got an expanding range candle, lower high, lower low, and just tapped onto this little support level. This is going to be one. It's going to tie right into the open range of the market, because of course Apple will be carried probably by a major break out of any kind of resistance levels, and AVGO will get that intrinsic benefit. So, but so far it's looking fine. I'm still holding puts in this. We'll keep you updated. SSP, also worthwhile mention. This is the long we talked about quite a while ago that I know some of you are still holding. This looks really good. But it is getting into profit-taking territory when my screen resumes. There we go. You can see that we're starting to get the contracting range candles, but we are respecting the 5-day exponential moving average, which means that the trend is still extremely strong in the short term. But what we'll probably do is tap into this 2150, and that's going to be the big test. So from a risk-reward standpoint, there's more to gain than by selling than there is to gain by holding, in my opinion. So that if we broke above 22, yeah, that could be a next trend to look at. But we've gone through accumulation stage, then to public participation stage, and then we're now reaching distribution stage. As you can see, that it's starting to get a little bit light. And just because the money flow is so strong doesn't mean that it's not going to turn around. Remember, everything has a top. So this would be where I would take profit on SSP, and I'd relook at it in the future once we get through this period of the next few days. EXPR. EXPR is a quick note I wanted to mention to you. This is a good example where I was asked last week. This was a failed trade because it went up into it rallied up. And we thought, yeah, this might be a good long here at 18 and change, and then it failed, hit the stop loss when it pulled back on October 14th. So someone asked me, how could you what would you do differently to avoid that loss, to have stayed in the trade? But let me point something out. Notice that the stock did fail the moving averages, and then it rallied. So the reason for the trade was because we had a predictable pattern that we thought, which was a momentum-based pattern. That momentum-based pattern changed when it started to reverse for reasons other than the qualities of a momentum-based pattern, which are the moving averages. So that changes the dynamic of the trade, and that could mean that, for example, it's in oscillation. It could be, despite the rally over the last couple of days, we could be seeing a rising wedge. We could be seeing a channel that's forming, both of which would be bearish. We could be seeing a few things, but we don't know, and when we don't know, you don't want to be in the way of it, because trading isn't about gambling. Trading is about taking opportunities when the rules make sense and the rules justify the probability of the trade. So this is kind of a bit of an outlier, and therefore not something I'm terribly familiar with, and for that reason I'm not going to gamble, and that's, I think, worth reviewing, just to talk about the fact that just because a trade could have made you money because it went higher after getting out doesn't mean it's one you should have been in. So there we go. MLM is the next one. That's from our current list. MLM is a head and shoulders on the downward angle, and we'll see if it loads up. There we go. There's our head and shoulders. It's a bit messy. You can see because we have that breach, that anomaly. But you can see that's starting to... we talked about this here a little while back. I think it was in October 5th. But we made a mention of it. But this is something that definitely on my watch list. You can see the head and shoulders is coinciding with a 200-day moving average. So a drop of this, if we break through this moving average, means that the head and shoulders would be complete, and we're therefore looking for a drop from 145 to 120. So that's where I'd be looking at the. If we get a significant break here below this trend line, I'd be looking at the 135 March puts. Now let's have a look here at UEPS. Okay, now this is actually one of the shorts that I was watching, and let me just have a quick look here. And so I think that this would be a good rally potential as a long. So I think that on the short side we want to avoid this. If you're looking at longer term positions, 1850 is the key resistance, but you can see this is kind of looking a little bit like a flag, and we're about to break through this. We're potentially about to break through this Twigs money flow. I'd expect that if this were to continue as a flag, it's going to get up to around 1920 because of this trend line. I mean, there's a trade idea if you want to watch it as a more active trader. You can see the accumulation on the money flow. This would play into the bull side of the argument, and that could be an easy $2 pop. So a quick 10% rally on this one. It's forming up like a flag. It looks like a flag. It's got this. It's got all the making all the right noises. So I'd kill this on the short side. I believe it already hit the stop anyway, but yeah, that's how I would be looking at that one. And so, as a possible long, if you were to trade that, you'd be looking at somewhere in 1761 up to a high here of 1923. Okay, now these are. I'll quickly show you these other ones. But these are basically the ones on the watch list for the moment. You can see the DOV short. There we go. Watching for that to have a break of this support line. So that's just one kind of in the locker. MRD. Okay, you can see again a similar type of scenario. We got some key support here, but with massive distribution on the smart money indicator. So keeping that one on the list as well. ZSPH. And I want to show you these guys and girls because I want you to develop the healthy habits of creating watch lists, so that you can start. Obviously watching for these things to occur and utilize the education that you're receiving from us effectively, so you're not just reacting to the market, you're following along with our thought process if any of these become actionable trades, and maybe they become actionable trades tomorrow. So obviously looking at that, ZSPH looks good. I mean, you can see we have this a flag formation that appears to have failed. Now it may not have. If we do have a parallel flag, then we're going to be seeing support come in around 54, which is also where the 200-day moving average is. But that's also 20% lower than where we're currently at. So this would be a half decent short here at its current levels. I'd be looking at a stop loss above the high of today's candle at 67.35, so 67.45, 67.46 would be what I'd be looking at. I'll type that in. And I'd be looking at the target here being down around, a look at these moving averages, which is the base of the flag, where you can see that was developed right here. There we go. So there's the base of the breakout. So that's the key level. So I wouldn't be aggressive in looking for the absolute bottom, but from 67 down to 59.39. And let's have a look at the low of this candle. We're looking at low of 60.50. Yeah, I wouldn't even be that aggressive. I'd even if we can get that target, I'd just get out at 60.63. So that's still 10%, and in these markets, what you need to be doing, in my opinion, is being more conservative. So if you can get an average of an 8 to 10% move on the stock within a few days, take it, because that's the level 1 trade, and then so we don't want to be challenging the possibility of going to level 2. Just take level 1. And then reassess it, because there's probably other better trades that are setting up that are level 1 trades, because this could also be a descending triangle. If it bounces, etc. But that would mean that it would bounce here, where the moving averages are. So this is still bearish, but as a short-term trader, remember that if it is a descending triangle, anticipating the market versus reacting, we can see there's key support that was broken here, resistance. That's why this massive shot came up. We bounced here. We're in oscillation mode. We may bounce there. We would go up to here, but then we'd break probably around $60 somewhere around the end of the month, which is also where open range would of course happen. So you want to tie all these factors and put the rules together to really kind of make these trades work. So last few, we've got Arden is worth a look. This one's also just starting to roll over. So you can see this is starting to get a momentum down type of look for it. This was originally a long, obviously, which did very, very well. This could also be a short. You could look at least probably a dollar drop down to this key support level. So there's one for a potential trade for tomorrow. And then on the long side, 3 quick ones, CDZI. These all look pretty much the same, which is kind of what we want. We want to be trading the same stock again and again and again if it's profitable, and in this case we're dealing with the same pattern. CDZI, possible fallen angel. I would expect this to reverse because of the sharpness of this drop. It's kind of had a very sharp rally, so I'd expect this to consolidate or pull back, but one for the watch list. CYTR, this one looks really good. This was a long, obviously, prior. And this did excellently on the first run. It hit resistance, it pulled back to support, and we've got kind of that consolidation zone. So when we get consolidation, we know the smart money is doing one of two things. They're either getting rid of their position and therefore holding the stock at a certain price to get rid of it before it drops to a lower one, or they're holding it at that price so they can accumulate more before it goes significantly higher. So therefore we need to look at when a stock goes nowhere in terms of price, what is the smart money doing to know what direction the money is moving. And you can see that the smart money has been strong in all these equal price levels. Smart money keeps getting higher, so they're holding it but accumulating more. So CYTR could be an interesting long from around 280, and I think it could have a good shot of shooting up to at least $3. So there's about about 7%. There's an 8% number coming back in. But second target wise could get up as high as this kind of 330 level. Last one on the list, OVAS. Looks good, and you can see this is the same kind of pattern. It's starting it's just broken through all the moving averages. This could be an excellent short-term play, but I would be obviously open range is very important. So we don't want to be jumping into lots of positions till we know what the market's going to do. But this is obviously one that looks good around that kind of 5-day moving average here, around say the 1330. Or 1333, could easily rally up to about 1640. So, ladies and gentlemen, that is your executive summary tonight. There's if you're already in a bunch of trades, and this is you say, well, why are there new ones? Forget them. Don't worry about trades if you're not looking for new trades. So, but these are the ones we're watching going forward. All right, guys, have a great night. We'll see you all in Executive Summary tomorrow and Trading Room. Take care.